We are talking today about mining, which is obviously a big part of the Canadian economy. Wanted to start off by talking about M&A. I mean, obviously, it has been busy in the M&A space in the last couple of years, particularly in golds. Maybe we'll start with you, Oliver. But just kind of curious, what is making M&A so attractive right now? And in terms of a buy or build model, what do you think makes more sense?
Thank you. And first of all, thank you very much for having me. Right, great to be here. In terms of buy and build, that's been the strategy that our CEO, Neil Woodyer, has pursued all his career long, right? Neil has been the founder and CEO of Endeavour Mining, which today is a, I think, $6 billion market cap company. Then afterwards, he founded Leia Gold, and now Aris Mining is his third stint. And in each of those cases, it was buy and build, right? And I think those case studies illustrate how much value you can create by pursuing this strategy. And, you know, for us right now, we're very much focused on the build part of the equation, considering we have an organic path towards 500,000 ounces in the second half of 2026. But generally speaking, you know, I think M&A has an important role to play because scale matters, right? Investors care about size, operational risk diversification, country risk diversification. You can achieve those things through scale, right? And therefore through M&A. And so I think it has an important role to play at the right point in time.
Yeah, thank you. And Bryce, maybe I'll ask you a bit about M&A too. Certainly we've seen a lot of the activity with the bigger names. Do you expect it will start to trickle down to your mid-cap and junior miners, and what will it take to start seeing activity in that space?
Yeah, I think like Taseko's a copper producer. We have a single asset. Ourselves, we're pretty focused on advancing our own pipeline of projects. We have the Florence Copper Project, which is under construction. That's going to become our second operating mine next year. I think, you know, as I look at it from our perspective, I definitely think there's the opportunity for it to trickle down. It's not something we're focused on. I think the juniors are still struggling to raise capital. I think there's opportunities to get positions, toeholds in some of the juniors as they need equity capital. That's something that we've done in the past. We've invested in a couple of our projects, taken 10, 20%, and then eventually taken on those assets once they get to a certain stage. So I definitely think you're going to see it trickle down in various forms. As far as Taseko is concerned, we're very focused on what we've got ahead of us with our own portfolio.
Absolutely. Go ahead, Eugene.
Thanks for the question. I think from my point of view, in base metals, really the battle for ownership and control of critical minerals and copper in particular is really just heating up. And a decade ago, you saw China ubering up copper mines. And just recently, the last couple of years, you've seen the majors start to get licensed, and investment license from investors to make acquisitions. You've seen the likes of BHP, Rio Tinto, Glencore, and many others start to acquire mines, as it's still cheaper to buy than to build. And I think until you see that the incentive prices, until we see that the equity prices of copper companies rise above the incentive price, then I think M&A is going to continue to happen, and expect that activity will certainly be strong and continue.
Yeah, well, I'll stick with you, Eugene. Certainly when you talk about mining, metals, there's a certain ESG investor who thinks that it sounds industrial, it sounds dirty, though of course there are many people who don't like the word ESG investors anymore either, so I know the tide is always shifting. But can you talk a little bit about that space, about industrial and critical minerals and the future end-use markets for them, and how you really square that with the physicality of pulling it out of the ground?
I think the new lexicon of critical minerals has given an opportunity for the broader market to appreciate that these metals are essential for the energy transition, they're essential for decarbonization, and today they're essential for data centers and AI. So whether you're left or you're right, I think there's a recognition that these minerals are needed, and where do you get them? And so, from my point of view, the companies you want to operate these type of mines are the North American base mines or miners who have the highest environmental and social standards. And those are the one, you're going to need these metals, and you want companies who have adhered to these high social and environmental standards to be operating them and to be operating globally. So I think it's given a new opportunity for people to understand mining beyond the physical aspects that we're probably more focused on in the past negatively.
Right. Now, Bryce, given all the new end-use demand for copper with the electric cars and the electrification of, everything, do you think there is going to be enough copper long-term to meet that demand?
I don't think so, no. Not from some of the projections I've seen from some of the industry coverage that we see out there. They're talking about doubling the copper demand over the next, some people say 10 years if you look at S&P Global, others saying by 2050. That's an order of magnitude the industry's never really supplied before. Projects are getting lower grade. They're expensive to build, their scale. So there's definitely going to be supply challenges to meet that need. And how demand reacts to that is sort of yet to be seen. But there's definitely a sentiment here with copper that we're heading into a period here of structural supply deficits. So.
Yeah. Now, obviously, the dynamics in the gold market are a bit different, Oliver, but maybe you can talk to me about, in our conversations, you mentioned a unique program you have on the ground, I believe in Colombia, where you really address some of these ESG issues in a very localized way. Will you tell us just a little bit more about that?
Yeah, sure. Colombia is in certain ways unique in the sense that there has been artisanal mining for centuries, right? And so there's a deep legacy of mining within the communities where we operate. And when we look at this, we think to ourselves, we got to find a way to coexist and collaborate and find a business model and an operating structure that ensures that we deliver a net benefit to the communities that we're operating in, right? And we have calibrated a business model by which we partner with contract mining partners that are kind of like former artisanal miners that have chosen to come out of the shadow economy into the real economy. And our partnership with them is good business for us. It enhances profit and cash generation for us, but it also results in them being financially better off. And now they're in the real economy. They qualify for social benefits. They can open bank accounts and so on. And that business model also helps the government in the sense that it formalizes a vast artisanal mining sector that maybe hasn't always paid taxes, right? And from an environmental perspective, to Eugene's point, you want to do processing or in general the extraction of minerals in a responsible way. And you can do it the right way or you can do it the unsafe and polluting way, right? And by us taking care of the processing, there's a lot of environmental damage mitigation, right? And so this business model, in a way, uplifts the communities, creates kind of like a scenario where all four key stakeholders are better off. And to me, that is how you want to calibrate like ESG, right? Something that's not a box-ticking exercise, but something where it is really ingrained in kind of like how the corporation operates, right? To me, that is long-term sustainable, and that is what protects the social license to operate. And unfortunately, the mining industry is littered with examples of companies that have lost their social license to operate because they didn't demonstrate that net benefit to the communities where they're operating in, right? So to me, that's really important.
Thank you. I remember just thinking that was so interesting, a very win-win situation. Just reminding everyone that we can take questions from the audience. I believe it's an app. Feel free to submit questions, but I will continue for now. Eugene, would you say that mining companies are undervalued for what they offer?
I don't think you'll have an executive on a stage to say that they're overvalued, but I think if you look at the cash flows and the cyclicality of this business and the long investment cycles it takes to create, a ton of copper or an ounce of gold, and the industrial uses for these, particularly by the tech companies, and you compare, I think, the valuations of some of the tech companies versus the mining sector as a whole, it pales in comparison. So I think there's always an opportunity for us to demonstrate that these are sustainable returns, and I think that in this cycle that we've seen, many of the companies have generated substantial shareholder value and returns, and I think it's one of the reasons the M&A has been a bit muted. They're a bit afraid to make a big bold step, and so I think as we've earned the right for higher valuations, you'll see that be rewarded with higher share prices and higher returns for shareholders.
Sure. This is a conference on Canadian finance, so I will ask a bit about finance. So Bryce, obviously there have been some changes, whether state-owned foreign entities can invest in Canadian companies. In your experience, because of that or other reasons, has financing tightened up in this sector?
No, I think we're in a very good position for particularly, established miners to raise capital. Taseko has been very active over the last couple of years, getting ourselves in a position to build our second mine. We found diverse pools of capital. We've gone to the bank markets. We've gone to the royalty and stream sector, which is quite large and has had quite a niche in this space. But we've also had a lot of success in the capital markets. I think the capital markets have been very constructive. We've done two series of refinances of our notes and tapped that market to help advance our projects. And then, of course, the capital markets, we've had great returns over the last few years with sort of this realization of mining and its importance and its need for the energy transition. And I think that access to capital is going to continue. It's still, in the junior space, I think there's still challenges, but I think for established miners looking to grow and build mines, I think it's available in a significant way. I think from a foreign perspective, we've seen, I think Canada still has its challenges to attract foreign investment. We have to differentiate ourselves in Canada. We have a number of properties in BC, and we need to remain competitive with the global landscape, and that requires, government commitment to achieve permitting goals and objectives, but it also, to the points of responsible mineral development, I think we've got to continue to have rigorous environmental standards, and I think that'll continue to attract capital, but we've got a lot of work to do in Canada in particular.
Mm-hmm. Eugene?
To your point, Bryce, I think that the juniors and the mid-caps have been able to attract some capital along with the seniors, but a lot of the exploration companies have not been able to, and I think that's twofold. One, obviously, we haven't seen the level of M&A where companies are building mines sustainably, and so they haven't had to replenish the pipeline with new projects, and so there haven't been the takeouts of these exploration companies and juniors that usually spur on the stock interest. The other thing is, I think, the big move from active fund management to passive fund management, and so getting away from stock pickers, I think it's been really tough for the junior market because it's hard for a passive manager to differentiate what's good and bad. And you're looking at market caps, you're looking at scale, as Oliver mentioned, versus something that's a geological a discovery that really spurs on that market. So I think that market continues to lag, and it's going to take some time for the M&A cycle to complete before financing cycles down to the junior and exploration companies.
Right. Now, Oliver, I'll ask, when a company has these kinds of capital constraints, not your company, but industry-wide, where is the best place to spend their money right now if they have limited access?
I'm not sure there's a one-size-fits-all answer to that, right? Ultimately, it comes down to what is the best risk-reward proposition in your respective portfolio, and for each and every company, that's different. For us, it's very simple, investing in our two operating assets that we're doubling in size, right? There's no one-size-fits-all, and ultimately you need to look at what delivers the best risk-adjusted returns to the shareholders and the stakeholders more broadly.
Mm-hmm. And I'll stick with you. When you and I were talking in advance, we were discussing the idea of whether or not Canadian pension funds are underinvested in this specific sector. Just what are your thoughts on that?
I want to be a little bit careful, considering I'm not a Canadian citizen. I'm a German who has lived here in the US for the last 13 years. And I'm not sure I want to wade into a debate over how Canadian pension dollars should get invested, right? But Frank Giustra and Pierre Lassonde, I think, have laid out a pretty compelling case for it. So I would just kind of refer to that, what they have said, right? And I mean, my two fellow panelists here are actually Canadian, and you have assets in Canada. So maybe I hand that over to you.
You might not want to touch that, but feel free.
Yeah, look, I think there's always opportunity. Look, I think there used to be a lot more institutional following in mining space in general in Canada, and I think that's, these specialist funds have slowly disappeared. And I think, like to Eugene's point, like we're seeing a lot more electronic trading and a lot of quant funds and others enter the space, which has created good volume, good access to capital, but has probably changed the industry and moved it away from some of those, what we would typically expect to be on a shareholder register. So I think there's definitely room for them to swing back, especially given the need for capital, given for them to see these stable and robust outlook returns that the mining industry here is promising over the next decade.
Absolutely. I see we just had a question come in. Thank you. I'll read it out loud. Do you all see it? No.
Oliver's question.
Do you think increased geopolitical tension and ballooning public debt in developed economies would boost the demand for gold and precious metals over the medium term? So Oliver, we will start with you, but then Eugene, I know Hudbay gets like 30% of its revenues from gold, so feel free to weigh in too afterwards.
Short answer, yes. Look, gold is perceived as a safe haven asset, and unfortunately we have rising geopolitical tensions, and wars that are currently ongoing seem to get more intense by the day. So that clearly kind of bolsters the case for safe haven assets. Importantly, we are at record high gold prices against a backdrop of still elevated rates, right? And I think that is a remarkable statement in and of itself. Now we have an easing cycle, not just here in the US, but pretty much across every Western economy, which, if history is any guide, should be a meaningful tailwind for gold prices. And then, look, I think a day or two ago, the IMF came out with a report that says more than $1 trillion are going to be owed by governments around the world, which is, I think, around 100% of global GDP, if I remember correctly. Doesn't seem particularly sustainable to me. And I mean, the budget office here in this country has warned for many years that the path is unsustainable, right? When we think back a couple of years ago, Liz Truss announced her mini budget, and it evoked a pretty meaningful response from capital markets. So, yeah, how long that is going to still be supported by capital markets, I don't know. But I get the sense that gold starts to look more appealing to investors who are concerned about that risk.
Yeah. And Eugene, I won't make you call a top, but what drivers are you watching the gold market right now?
Yeah, I won't call it top. It's still going. At Hudbay, we're a copper company where copper is our primary metal, and copper is the barometer of general economic activity. And given the positive economic outlook for the world in the longer term, I think that is a nice industrial metal. Gold's usually, as Oliver mentioned, a barometer of political instability, and so usually for us it's a counter-cyclical hedge. One goes up, the other one goes down. We're in this really unique time in the world where they're both going up for different reasons, and so we're enjoying the fruits of what we planted in both cases. So I'm not calling the top of either. I think there's certainly, Hudbay does believe in the long-term supply and demand fundamentals for copper. They're really sound, they're robust, and it's founded not only in the demand outlook, but in particular the very shallow supply pipeline that we see. In terms of gold, I think that the continuing geopolitical uncertainty and high debt that all of our countries are operating in provide a positive backdrop for that. So looking forward to continued strong prices and strong returns for our shareholders.
Thank you. I will say the common denominator today is obviously Canada, but at least 2 of these companies are operating or building projects in the U.S. So maybe, Bryce, you could talk to me just a little bit about how you're finding the process of permitting, regulations, red tape, in the U.S. with your Florence project versus what you've experienced in Canada before.
Yeah, like we are, coming out of a pretty long permitting process here in the U.S. We were successful. We got the commercial scale underground injection control permit from the EPA last year. So we've started construction. I would say that's a very rigorous program. We did it in 2 stages. It took a long time. When you factor in our previous owner started it in 2010, it took us 13, 14 years. I think people are going to judge that to be relatively quick when it comes to the U.S. But I do think it is, a desirable jurisdiction. It's an area that we're continuing to focus on is U.S. opportunities. I think the U.S. in certain cases are open to mining. We are very proud to be advancing a new source of copper for the U.S. market. The U.S. market needs for cathode, they're heavily reliant on imports, and that's not changing here with Chinese dominance of the metal industry and especially copper. So, I think it's. I think Canada can look to it because I think there's still examples where the U.S. is able to advance projects through and get permits done, and still we have other projects in Canada that are still struggling to get to that end game of construction ready.
Right. And Eugene, have you found that Hudbay's projects in the U.S. are you have to approach them somewhat differently than your Latin American or Canadian projects?
I think governments across the world today, have to balance the interests of too many constituencies and special interests, and so it's difficult for them to satisfy everyone. And we're only seeing now, particularly in the U.S. and Canada, and the need for support for these critical minerals to ensure that we have the supply for our North American supply chain. And so I think that's changing. We have gone through again a rigorous process of permitting, getting the social license to operate, and all of our jurisdictions, and we're finally seeing leadership from federal governments in Canada and the U.S. and to understand that having North American supply of these critical minerals is really essential for sustainable economic wealth creation across the country, and balancing those special interest constituencies with the kind of long-term strategic mandates for these governments. I think it's been tough, but I think they're starting to see light.
Yeah. Now this is blinking at me, so I'm going to do a quick lightning round. I'll ask all 3 of you, what is keeping you up at night in this sector? And then secondly, if you are back on this stage a year from now, which we hope you are, what do you think will be the biggest thing that we are all thinking about and talking about? I didn't warn you about this one. Eugene, I'm going to put you on the spot, make you go first.
What keeps me up at night? Just everything in our industry is predicated on social license and alignment with our community. So ensuring that we have the broad support to operate and license to operate across all of our operations with the highest social and environmental standards, and generating economic wealth for all of our communities is what's a primary concern, and that gives us the incentive to come to work every day. In terms of a year from now, I would expect, as I said, I think we certainly expect to see higher copper prices and probably similar gold prices. I don't know about higher gold prices, but similar gold prices in my view.
Thank you so much. Bryce?
Yeah, quickly, I'll just say, look, it's excitement. I think this is an exciting time for mining. Our business we're at a very transformational time, getting our second mine up and running and building that out for production next year. And it's just this access to capital. I think we're seeing support across the capital structure. So it's an excitement that keeps me up at the moment.
Good answer. Oliver?
I sleep very well. Nothing keeps me up at night. But, I guess, we're laser focused. Not I guess, we are laser focused on delivering the 2 expansion projects that we're working on. That is front and center for us. In terms of kind of like surprises for next year, or what my hopes would be, I would hope that we see the general investor come back to the sector. Right? I mean, right now the investment universe is dominated by mining specialists, and I do think the industry is way too critical in terms of what it enables, right? That it can get, it just can't. I think the global economy cannot afford to overlook and underfund the industry for much longer, right? So I have a hope that generalist investors pay more attention to it, and I personally have started to seeing some green shoots in that sense.
Sounds great. Well, thank you for joining us, and thank you to our panelists.